So that way, it's just a way to bring value to anyone maybe who misses it or wants to go back and see what we chatted about. So I mentioned that today we will be talking about 2021, and it won't be a single presentation, but our goal is to share with each other what we see happening this year. Um, but before we go there, let's start with introductions. And what we'll do this time is we do a bio. So talk, share what your name is, where you are, what you do with real estate, or what you maybe want to do, and also what are your goals for 2021. So we'll add that one as well. You know, what are your goals for this year? And that way, that will help us to. I'm adding more people or admitting. There we go. What are your goals for this year? So I'll start. My name is Sergey Tkachev. I'm an agent investor in West Sacramento. Have an accounting background. Have a couple properties on the East Coast. Have done just various things in real estate, fix and flips, buy and hold. We just sold a fix and flip and did a refinance I just mentioned in Florida. So just I do an array of things within real estate investing. I enjoy chatting with others. And my goal for 2021, I think, is 2020 showed me that things can go, unexpected things can happen, right, with the whole pandemic. And so when that happened, I realized that there's a number of things I need to kind of line up and get some properties, refinance with longer term debt, arrange some other items so that if something happens, I'm ready for any correction. But even if that doesn't happen, so I have funds so I can invest going forward, whether it's in California or out of state. So I have a list of things that I want to kind of adjust this year within my investing focus. So that's my goal for this year. And then anyone can jump in and just go, one after another.
I can jump in. Can I go?
Yeah, definitely. Yeah, just jump in and go. Definitely.
Hello, everyone.
Hey, Deb, we hear you.
Hello, everyone. My name is Dave Patel, and I have been a member of this group. Whenever I get a chance, I used to come to the meetings. I loved in-person meeting, but 2020 has shaped us not to cannot meet in person anymore. So now we are on Zoom, everybody. So I have a couple of properties that are out of state. I am a buy and hold investor. I like to buy and finance it because that's my expertise, is to get a good loan, 30-year, fix it, and just forget about it, and then hold it for long term because that's my retirement. So I like to build my portfolio. So right now I have two properties. One I bought in 2019 and one I bought in 2020. So 2019 I bought one in Little Rock. In 2020 I bought in Memphis. So this year my goal is to buy at least one property every year, finance it, and then live it for long term. And whatever positive cash flow I have, I throw it towards the principal. So the rent is also paying towards my principal as well as the positive cash flow. So in 10 years, that property will be paid off. So after 10 years, I will start seeing properties getting paid off because I'm buying one property every year. So first one I bought in 2019. So when it comes time for my retirement around 55, when I plan to retire, I will have properties close to pay off. So that's my goal, is to at least buy 10 properties. So that way I have $10,000 income, all paid off property, and then I don't have to worry about social security, insecurity.
Awesome. Thank you.
That's my goal. Yeah. Anybody else? I'm done.
Sure, I can go next. My name is Lisa Vlahakis. I live here in Sacramento, kind of the same goal as Dev. I live in California. I have two out-of-state properties. one in North Louisiana, one in North Tennessee. So goals for this year is, my husband and I sold our primary residence here in Sacramento and are renting until our daughter graduates high school, and then we're going to move to Hawaii. So we're actually working with the realtor right now to buy property over there that has at least one or two Ohana units that we can rent, like house hack. And then also we were under contract for another property in Florida, and that kind of fell through. And so the goal, we decided to put that on hold and focus on getting this house in Hawaii. And then after that, back to Florida and looking for something that we can short-term rental out there. Our other ones are long-term rentals. And so looking to kind of change it up and see if we can increase our cash flow. Kind of like Deb, we're more focused on trying to, everything goes back into getting properties paid off, because the goal is to replace our income and retire early.
Nice. I can go next. Is that cool?
Yep.
Cool. My name is Sean Smith. I presented on the last one here. I had a really good time. It's fun talking with all you people. It's fun. This year, 2021, I have two goals. One is to continue growing the company that I work for, which is Real Property Management. So we have 4 different portfolios out here in Northern California. So East Bay, Solano County, and 2 portfolios in the Sacramento area. So I'm looking to grow this part of the company that I work for. And then I'm also looking to do my first flip out here in the Sacramento area. I've been involved with some stuff in different parts of California, but I've been local in Sacramento for so long. And I think at this point, I have strong vendors in place that I can trust, that will give me good deals that I can rely on. I think this is the year for me to do my first flip out here.
I can go. Nice to meet all of you. My name is Ryan. I live here in Sacramento, and I've been looking at real estate investing for a while. But this year last year, actually just started to go in the path of taking action. And my goal for this year is to just get one rental property, just get that first one done, and hopefully continue to grow from there on out. But nice to meet all of you.
Hey everyone, so I'm Vijay. I will go next. Yeah, nice meeting you guys. So I just started. So I own a property in Midtown Sacramento, duplex unit, and one of the unit is upgraded now, so I'm ready to rent out, and the other unit is already occupied. So 2021 goal is I have to continue with this real estate investment, and I want to plan to own another property either in Berkeley or Davis or in Sacramento itself. Yeah, that's my goal this year. Thank you, guys.
Hi guys, this is Mike Peterson. I'm in Sacramento. Let's see. I've been going kind of a different way a little bit. I've been working with some notes. I've already purchased one. I've got a second one that I'm trying to close. And I have to thank you guys for this because, investing out of California is much more reasonable than investing in California. It's really hard to find anything affordable. Especially with some profit in it, with some equity in it. So with your help, I've gone shopping and I work with some guys who do notes. I'm also arranging my own financing because I am a broker. I'm setting up my lending center, which we're doing hard money and private money. So I'm making contacts there. Let's see, what else we got? Oh, I'm also self-directing an IRA, so I'm going to set myself up with some funds. I got about 100,000 that I can self-direct and get that ready, plus home equity for another 100,000, because we're going to see a lot of opportunities this year, and we have to have our ducks in a row, and financing is going to be a lot of them. as a broker right now, I am not seeing any listings. I drive through neighborhoods, I do valuations on properties or inspections, and I just don't see any. There are so few listings. When I do a valuation on a property, I'm having to go a mile to 2 miles to find a list comp, and usually they're all pending. So there is nothing available. We're gonna see a change, but I don't see it yet because there's going to be a lot of defaults and a lot of well, whatever. The lot of defaults. Renters are going to stop. I'm losing my train of thought. Yeah, Sean's shaking his head. Sean, also a few weeks ago, you mentioned that you're not seeing anything right now. You mentioned your tenants are very. You screen your tenants, and you're not having a big problem with that, but there's a lot of them out there, I'm sure. Has anything changed, Sean?
We're still seeing the same thing from last month. I mean, ultimately, we're seeing less people are interested in the downtown, midtown area, and they're moving out to places where there's a little bit more space. Large flow of applications still. It's really strong on the renter side. Like you said, that the listings on the sales side, they're just not there.
They are not there. They are not there. So that's pretty much it, guys. That's kind of what I'm doing. I'm just getting ready for 2021. We got a lot of changes. Every day is a new adventure in 2021 so far. So let's see what happens in the next few months. Thanks, guys.
Thank you, Mike. Who wants to go next?
I would go next. I didn't attend the beginning of the meeting, but I assume it's just an introduction about yourself. So
yes, yeah.
I woke in tech. There is now I have a goal in 2021 to own my first property, but I get the idea. I have asked many people, but it seems to me that it's now people say, no, you have to wait because now it's a bubble. So wait until the price goes down. But some people have said, no, do it now. Don't wait to 2022 because it's going to keep increasing. The area that I am looking for, it's mostly about the Bay Area. I went to the north of San Francisco. But it seems to me it's not more attractive like the Bay Area, where the like demand is way higher than the other places. So.
Mm-hmm. As you mentioned, what you mentioned about should I invest now or wait is I have that as a note to kind of throw out to the group to talk about. So we'll touch on that question as well.
Great.
See who
I'll
has
go next if that's
Go ahead.
okay.
Mm-hmm.
Hi, I'm May. I'm new to Sacramento, new to this meetup. Nice to meet everyone. I'm usually from LA and moved up here a few months ago and had the preconceived notion that Sacramento is cheap compared to LA and realizing that I am extremely wrong. I've been working with the David Green team trying to look for a property I can buy and hold, basically multifamily, and haven't been too successful yet, but I'm still looking. My goal is to at least have 1 or 2 multifamily property this year.
What part of LA?
West LA, the worst part property
Okay,
wise.
awesome.
Well, worst part for buying, good part if you actually have it.
Yeah, that's true.
Nice to meet everyone.
Awesome. Yeah, well, thanks for joining. Welcome.
Thank you.
All right, who's next?
I can go next. This is my second meetup. My name is Danny Zapata. I actually own several small multifamilies in the Sacramento area. My most recent acquisition was a sixplex in near Midtown, actually across the street from Southside Park. So we're doing a full gut renovation there. It's probably going to be done in the April-May timeframe. So really for this year, or at least the first part of the year, I'm really focused on getting my money back. So starting to talk to commercial lenders because it is a sixplex, and kind of going through that process. I read some books and trying to make some connections around that. But once me and my partners refinance our money out, or at least most of the money out, we're going to continue kind of on the same path and going a little bigger. I guess I'm a little more optimistic about that midtown, downtown area as COVID, kind of drags on, but the vaccines, get distributed and things start to open up. I believe that there's going to be a drawback into those kind of places, those kind of areas. Maybe not you also know that, Sacramento was not hit nearly as hard as, places like San Francisco. So I'm expecting to at least see some good bump up there, and, through aggressive screening, have, some really good tenants in place in the next several months. So yeah, nice to meet everybody.
Awesome. Thank you. Who's next?
I'll go next. Hey everyone, I'm Clark Henderson. This is my second meetup. So yeah, I have a property in Las Vegas currently at the Palms Place. I had a property, a fourplex, with a partner of mine in Kansas City, and that was to say the least, a rough experience. So I'm looking to get back up on the horse, and I'm looking to do in 2021 at least 2 properties. I've been looking in Sacramento. I went driving around different neighborhoods, and I'm also working with the David Green team. And it's tough. It's tough to find anything out there will even break even cash flow wise, let alone make anything, which is not necessarily what I'm looking to do. I'm looking more for equity in the Sacramento area, but don't want to lose money either. So it's been tough trying to find anything in the decent, nicer neighborhoods. So that's kind of where I'm at. Also looking to buy potentially again out of state, either in Kansas City or Tennessee. So looking to do those couple things and acquire at least 2 properties in 2021.
Thank you.
Yeah.
Who else hasn't shared?
I haven't. I missed the opening, guys. I'm sorry. Got in late tonight.
No worries.
I'm Michael. My fiance and I live in West Sac. We own a single family here that we live in. We are, our goals for 2021 are to either, get investment, probably multifamily duplex, or get into something in the Granite Bay Roseville area that we can, house hack with an ADU, or, add on an ADU, something, same issue. I mean, everything we've come across, obviously anything on market just doesn't pencil from an investment perspective, even to try to cash flow. So, we're also, starting to open our eyes to maybe taking some cash that we're sitting on and investing out of state, at least to get the ball rolling. But yeah, looking forward to just networking with some people. And I have a marketing background, so I've definitely been, as I've learned more about the marketing cycle, definitely interested in, some of the off-market strategies, but right now don't have the time to work every process fully. So
awesome. Thank you, Michael. Rosa, are you? I think I see you talking, but the sound's not coming through for some reason. Yeah, I think something's with the sound. Gary, you want to share?
Hello.
Yep. We hear you, Gary.
Hi, my name's Gary. Hi, my name's Gary LaRussa. I've been to a couple of the meetings over the last few years, kind of sporadically. This is my first Zoom meeting with y'all. But yeah, I currently house hacking in Sacramento. Have a house hack going on. It's going pretty well. Did in 2020. Also looking to go in 2021 out of state. Trying to find what market I want to dive into. Potentially turnkey. It's kind of where I'm headed as of now. Also look into potentially do some hard money loan or private money loan lending. Get into that a little bit, do some more information, get some more information on that. But yeah, that's where I'm at right now. Like I said, I live in this area. I'm a firefighter, paramedic in the Sac area. And yeah, that's about it for right now. Thanks.
All right. And do we have anyone else? I think Rosa, we couldn't hear you. See if your sound works now. And then if there's anyone else that hasn't shared, feel free to do so.
Hi, I don't know if you can see my feed. I was having some trouble before. I'm James. I've lived in Sacramento for about 3 years and sort of a transplant from Southern California. So I've been trying to get into the market. And as I've been saving up, just reading and trying to join up different groups and stuff like that to discuss. This is the second meetup that I've been here, and I'm interested in just learning.
Awesome. Thanks for joining. All right, Rosa, I see you raise your hand. I think we have sound.
I'll try to lower it.
There we go.
Okay, sorry everyone, sorry. So I just wanted to share, I did my first sale. I've never sold anything. So I was just wondering, how soon do you get the money? So I'm gonna call the lender tomorrow to make sure that the loan's paid off. But I never, so I closed out on a sale.
I think, yeah, you're on mute right now. We lost your sound. Just let's see. Rosa, see if you can join. Go ahead and if you can unmute, go ahead and let us know. Anyone else that we missed? All right, Rosa, if you get the sound back, let us know.
I'm sorry, with all the technical issues, you
Okay.
have to unmute both the phone and the Zoom. Sorry.
No worries.
So I'm sorry for all the technical problems, but I just wanted to mention that I did a sale on a house in Alabama, and I was just wondering, how soon do you get the funds after you sign the closing docs? And I'm going to take whatever money I get from that and put it in a house in Florida. And I'll share with everyone how Palm Coast or Palm Bay, Florida does in terms of real estate market. I'm hoping that I can find a tenant right away, and I'll share with everyone in the March meeting how the Florida
Awesome.
market looks. But I sold my house in Alabama because I had a hard time renting it. The first time I bought it, it took 5 months to find a renter. They paid the rent every month. That wasn't a problem. And then they didn't want to renew the lease. And I figured, oh my God, is it going to sit out on the market for months? And I took advantage of the low interest rates and just went ahead and cut my losses and just got my money back out. So that's it for me. Thanks.
Great, congrats on the sale. And definitely share with us in March on what happens with the Florida deal. Do you have a house in mind already in Florida?
Yeah, so I kind of, for me, I don't have much money. So I don't have much money in my pocket. So I like to sign up and get on the listing for these build to rent models. It keeps me motivated to save money. And I signed up for this about a year ago. And with the COVID and everything, they didn't build a house. And that kind of worked out in my favor because I never had the down payment. And it just worked out where I was on a list and I was trying to figure out where to get the money from. And I just went ahead and did it. And I figured, okay, good. I sold this house. I used this money to put it towards the next house. And I'm thinking Florida's going to probably in the long term be better than the house that I have.
Okay, awesome. Thank you. Anyone else we Anyone else that didn't share? All right. So I mentioned in the beginning, and I know some of you guys joined in right after we started. So our goal for today's meetup is to have a collaborative talk, conversation about 2021. I know there's quite a few, if you guys generally follow any of the experienced or experienced investors or guru-ish investors, usually they have in the beginning of the year, each one of them has some kind of forecast and prediction for the year. And I know that generally you can find a lot of those. And so my thought was to do more of a group conversation to see what members in our group foresee, for this coming year. And I know there's a lot of us have different backgrounds. We're involved in different aspects of the real estate industry. And so I think it would be a good way to hear everyone's thoughts, and they may be different. I think that's going to be totally normal because no one really knows what's going to happen in 2021. But it's also interesting to see where we may be in agreement, and oftentimes that may be an indication that there's something there that we can look forward to. But before we start, as a way to kind of break the ice and give some food for thought, let me just quick screen share. And I wanted to, here's what I wanted to share in the beginning. So this is just our goal, right, for our meeting today. As we talk, think about these questions. What will 2021 look like? So obviously that's an open-ended question, and that's what we're all curious about. What are the market trends? So what is happening in the market now, and what is likely to happen going forward this year? And also, how will this affect our goals and plans for the year? So what do we expect to happen, right? And then that should affect what we plan and the goals that we set for the year, so that we can actually properly plan to reach whatever we're trying to reach, whatever our goals are. And I want to share also, some of this was mentioned. I think Mike mentioned about actually the next slide is going to be what Mike talked about, the inventory situation. So this is something interesting that I saw from Realtor.com. They had an article about the top housing markets for 2021, and Sacramento is, so this is expected growth, right, for 2021. Sacramento, Roseville, Arden Arcade is pretty much right at the top of expected sales growth year over year. And then they have the price growth year over year here. So combined growth, they're looking at 24.6%. So it was surprising. I think I got this a couple of days back in the email. So I was surprised that Sacramento is really on the radar as far as expectations go for price growth. And that's because of demand. You can see the other markets here. 4 of these markets are California markets. And I think the way they calculated this, or the way they came to these markets, is they're not necessarily the most affordable. It just, and there may be other markets with higher growth, but these are kind of the more or less mid-tier or larger markets or areas that are expecting growth. So it sounds like we're in a market, even though California has other areas that have seen decreases in prices, some of the more expensive areas like the Bay Area and LA, Sacramento looks like is actually going up. And then this is an article from the source is from Realtor.com as well, I believe. This article is from calculatedriskblog.com. They have quite a bit of interesting articles about what's happening currently in the market. Oops. And so they talk about this related to the Sacramento housing market for December. So for December of last year, the sales increased 23% year over year. So December had 1528 sales, and that was up from 1244 a year ago. And then the active listing inventory decreased from November to December by 23%. So just within 1 month, December had a very low inventory And compared to prior year, December 2019, that was a 44.1% decrease. So usually if you're looking at low inventory, you're generally looking at higher prices as well, right? Because you have low supply. Even if demand is equal, prices are going to be going up. And then goes into days on market. So pretty much out of the 1528 sales in the month of December, 87% of them were on the market for 30 days or less. So homes are selling quickly. And Mike, I think that's what part of what you were mentioning when you were sharing what you're seeing in the market is that there's really not that much inventory. So that's just some food for thought as far as what's going on, or a snapshot at how we close the year. And what I wanted to do is give it over to the group, and my vision is that this can be very open-ended. You guys I'll try to give a maybe specific, I'll lead with a specific question or thought to think about and talk about, and then if you guys have any thoughts, any experience, any questions, go ahead and jump in, and we can have a pretty good conversation about it. But generally, so here's a question I would throw out maybe to start off. What do you guys maybe see or feel or think what will or is happening to the population? So population growth, California, Sacramento, relative to other states, and how will that likely affect the real estate prices or market in general here in California or Sacramento? And feel free to jump in and just share your thoughts.
Okay, guys, I'll start with this one. To back up on that, Sergey, November and December are always the worst in real estate because people don't want to move through the holidays. So that's why we're really, really seeing such low inventory. The other reason, of course, is the forbearance. And then what I stumbled on, Sean, as I was asking about the unlawful detainers, but you don't have a whole lot of those going on. But, I have a funny feeling that all of those are brewing, and we're going to start seeing those in the next few months. What else was that, Sergey, on your comment there?
As far as population, so how will population trends affect the real estate market? Specifically Sacramento and California.
Well, trending is all the imports from the Bay Area because, Zooming has changed everything. We don't have to be in the office anymore. And now we can Zoom. We've realized that we don't need to be in one place. The hottest market, I think, in the area right now is Tahoe. People are leaving. They're going to Boise, Idaho. I saw that on the list. Tahoe, because they're leaving the Bay Area, cashing out, and they can go to some place that's kind of like paradise. They can go live up there for a couple months, try it out, or a couple years, try it out. And they're coming to the Bay Area, which they have for many years. I'm a transplant from the Bay Area, and I think a lot of us probably are. And we're going to keep seeing that trend because they can sell a more expensive home in the Bay Area, who move to Sacramento and get at least twice the home that they do here, that they have there. And, it's going to make our properties increase in value, and it has for years and years. But we will see some more inventory, and it's just a matter of time. But I don't know if it's a good market to really invest in because, like you guys are doing, you can go to other areas that, are a lot more reasonably priced. And I'll pass it on to somebody else. Thanks.
Yeah, I like your comment about the transition from the Bay Area to Sacramento. Like, that's always been a story. People have talked about it for years and years, but I think more so this year we're seeing that than any other year, strictly just because of the pricing out there in the Bay Area. Our company has a couple of portfolios, like I told you. Our Bay Area properties have actually decreased in rent value because we're mainly residential. in the really concentrated areas like San Jose, concentrated areas like San Francisco. Then what we're seeing is our rents in, for instance, Sacramento, Roseville, I mean, those are going up 10+% from last year to this year, just over the course of a year, which is pretty substantial. So it's interesting, we are seeing that head this way. And the other interesting thing in relation to rents, I think, is that they're going up so high because I think so many people are coming over to places like Solano County and Sacramento County. There's no inventory to buy. We can't even compete. They say, maybe I'll just rent and wait it out until it drops. So with the sale prices going up, even more so the rent prices are going up here. We're seeing a ton of that. The other thing that's interesting is what you were saying, Mike, the unlawful detainers. Nobody's been able to do an eviction for almost a year now, maybe 8-9 months. We're fortunate that we haven't had that many that get to that point. We've had to do a couple of cash for keys deals on some of these just to get the property back. But I really do think there's a ton of unpaid rent out there just sitting, waiting, and we'll see what happens in the next few months.
And to continue on that one, Sean, another point that I was going to make, we haven't even touched on the commercial side, because now that we've learned how to Zoom, we don't need offices anymore. And all this commercial that they've been building and say like the Thomas or what are they going to do with these mammoth buildings? Because they're realizing that we don't need commercial properties. And like on Arden, a lot of these are getting demolished. You see for lease signs anywhere, and that's going to hit our real estate market pretty hard because people aren't going to want those properties anymore. So where is that going to lead us? And I'll pass the buck again.
Yeah, I just want to jump on that one really quick.
Go ahead.
Some of the clients, because we primarily work in the residential space, not so much in the commercial space, and some of our clients who've had commercial properties have actually been converting them to residential properties. So we may see more inventory in the future with people who are doing that.
And I was going to ask, when Sean, you mentioned inventory, is there a chance that we'll see inventory increased, given that it's much harder to and much more expensive to build in California than, let's say, other areas, right, in other states? And so that's an interesting question, because possibly the conversions may be the best way to increase inventory. We have the ADU laws, right? So that will create more housing supply, not maybe necessarily in terms of housing to sell, but as far as housing to live in. But that's an interesting question as well, as far as inventory. Aside from conversions and maybe converting malls, I've read about that as well. Are there chances that we'll see inventory increasing, or do we have to just hope that builders will be able to catch up building homes?
I don't know. We'll see where it goes. It's tough to know.
Mm-hmm. And another comment, a lot of this is going to be, there could be a new boom involved because, in this corporate, all the office space, are we going to go to a per diem type of thing where you get a few, your businessmen, they come to town, they meet for 2 days, rent an office for blah, blah, blah per day. So are they going to start turning this unwanted office space into per diem? Regis has done that for years. They've got quite a few properties down on, I think, how that you could rent per diem per week. And are we going to start seeing that happening?
I'm in the Bay Area, and I do commercial leasing and sales. The market's kind of similar, so I can talk to that portion. I mean, leasing has just gone down activity wise. In downtown San Francisco, it's gone down 75%, the activity compared to 2019. And in terms of what they're going to do, I don't foresee that office is going to go away completely. I think it's going to be some kind of mix where they have, companies have an office space, but it's going to be optional for someone to have to come into work, or maybe it's not a dedicated desk, but people are switching in and out. So office will come back, but not at the same vigor. And I don't know what they're going to do. I think converting them somehow is smart. But figuring out zoning and all that will be interesting. And in terms of all those malls, I read an article, maybe you guys read about it, that they are turning like big JCPenney Sears stores into distribution centers for like Amazon or whatever, so that, they're closer to where they need to ship it to us, consumers. So I read that and I thought that was really interesting, because it's been on my mind, like what's going to happen to all these malls? Like, how are they going to reinvent it? Because I've also heard theories like, oh, maybe they'll turn it into like a live work kind of space. But I don't see that happening, especially with the whole COVID thing. Those are my 2 cents.
One comment about the situation is that yes, like people expect that the life will goes back as before COVID, but the problem is the chance now for many. There was a chance for many company to rethink about their headquarters. So many of them will move from the Bay Area to a different state. As we see now, that Tesla have moved their headquarters to Texas, and many companies actually have the same. They start thinking, why do we have to pay a huge amount for renting in the Silicon Valley? So we need to go out to a different place because people prove that they can work with a distant remotely. The problem is not about the company moving out. The problem is many of the area near to the Bay Area was occupied by employees. One of the example is Tracy. Tracy is a city far away from the Bay Area, but most of the people living there actually work in the tech company. They will go there 2 days a week, 3 days a week. So by that also include Davis, Vacaville, and different other cities. The problem now is if the companies start thinking about moving out of California or to a different place, that will give kind of a risk to the housing prices right now in California in general.
That's definitely an interesting question and or topic, and something I've been thinking about, because it seems on the one hand we hear about people moving out of California, right, and a certain kind of exodus happening. While at the same time, I was recently looking at some forecasts as far as population growth in all of the states, and it seems like there's an expectation that in general, most of the states are going to have population growth. There are some states that will have decreased population for various reasons, but California is one of the states where it's expected that there's going to be a pretty good growth in population, despite the fact that people are moving. Part of it is immigration. Part of it they include births in there and go through that calculation. So that's it's definitely interesting to see what will happen, because it seems like there's two forces working opposite each other, and which one is actually going to be the one that I guess wins in this sense.
I work for a tech company, and I would just add some comments around the permanent work from home. I think, we've all been forced into it. I think most companies are not set up culturally and to really have it last for a long time. So I feel, at least in my opinion, that I get the sense that there's a lot of this work from home stuff is not going to be as permanent as people say. It's hard for big companies who have a culture of being in the office to just pivot. And now, we're saying we're doing it, it's out of necessity, right? But what about when it becomes not necessity, when everything opens up again? Are those companies going to stick to it just because it saves them money? They may be suffering in other ways in productivity. and just getting stuff done and being able to innovate. I mean, culturally, there's very few companies that do it really well. So I think that at some point, this is not as widespread as we think permanent shift.
Yeah, I think that's a great perspective. My brother-in-law, he's a developer with Amazon up in Seattle, and very easily his whole team could work remotely, but him and his entire team are pretty convinced that they'd prefer to work in person in an office together as opposed to remotely. So even if like the people of the company want that, I don't think that, I think you're right. I think it's completely out of necessity as opposed to a long-term thing that we can expect.
What are your thoughts on how interest rates have been affecting prices, and how will it go forward? Obviously, we don't know for sure where the rates will go. It seems like there's kind of a general indication that they're not going to be going up. But what do you guys see? What are your thoughts as far as that is concerned?
I mean, these interest rates, them being so low, I mean, that's not encouraging any inventory to come available. If anything, people are just refinancing and getting a better deal and holding on longer. If anything, it's just increasing demand, right? So there's just going to be that much more demand. I just don't know where the supply is going to come from. I don't think it affects it all that much. I mean, unless people are trading into different properties, you know, that might free up some inventory. Curious to hear anybody else's thoughts on it.
Anyone else? What do you guys think?
I know quite a few people that have traded up, leveraged, you know, significant amount of equity to trade up and, you know, borrow as much, if not more money at a lower rate. And you know, their payment virtually goes down to get into a nicer house. So, or closer to their dream home. So at least from what I see, I definitely think it's helping stimulate demand. But you know, you definitely hear the argument about what it's, you know, what those rates are how they're gonna have effects long term.
One thing I've been seeing and thinking about is I think that at least what the low rates are doing is allowing for someone to afford a higher priced home, right? Because generally people look at, and lenders, they're going to look at what the buyer can afford comparative to the purchase price and what the loan will be and what the rate will be. So the lower the rates, the higher price point you can purchase at while keeping the same monthly payment. And so I've been thinking about the fact that possibly that's definitely played a role in allowing prices to go up, because people can afford to just pay more, and so they're just able to try to overbid each other because they're still able to afford the payments on a monthly basis. But I agree with Sean that doesn't really do anything with the inventory. I think just the price points are able to be higher. Everyone's thinking deeply. and
Some of the
this
implications.
Yeah. Well, and what I've been thinking about is, so let's say if I'm purchasing a property right now, for example, and then my plan is to rent it, right? We've heard from a couple of people that it's hard to find something that makes sense even in Sacramento, not to mention some of the higher priced areas in California. And the other option is out of state. But let's assume I want to buy in Sacramento. If I purchase, what are my risks, right? So if I buy a home for 300, 350,000 now. What's the risk that the price will go down in a year, in 6 months, in 5 years, in 10 years? And what is the risk that the rent will, let's say if I plan to rent it, maybe not now, but in the future, or maybe I plan to rent it now, what are the risks with the rents? So is there a risk that rents will come down? Is it pretty certain that they will generally continue to go up? And so I think the interest rates play a role in the price points, whether there will be any foreclosures on the forbearances. That will play into the price point question. And then the rents, what will happen to rents? That's probably going to depend on demand. There's a bunch of things to kind of that I mentioned there, but does anyone have any thoughts about that? I mean, maybe you're also looking at, thinking about buying. And someone mentioned, should I buy now? Should I wait? What should I do if I'm in that position?
Okay, well, I'll tackle this one, and that's kind of why I'm getting my ducks in a row as far as getting funding together, because we're going to see a change. I went through the last reduction in value, and all of a sudden these houses are competing. They're 350, then the next one's going to be 347, the next one's going to be 342, and it goes that way, and it's going to be a feeding frenzy, and you're going to hit some of the sellers that really want to get rid of it. There'll be 3.25, and that's the way this is going to start. And it's going to be, I'm going to say, probably a good 5-year, if not longer, roll. We're not seeing it yet, but that's kind of what I'm predicting after seeing what we went through in 2007, 2010, all through that range there.
Well, what's the catalyst there? What's going to cause that to happen, in your opinion?
Because there are going to be so many listings on the market, and like I said, 350. The next one's going to be 347. The next one's going to be 342, and that's the way it starts. That's where you're going to start seeing the decline. The banks are really going to have too much inventory to be able to liquidate. They're going to have a buildup of inventory, and that's what's going to happen.
That buildup of inventory, do you feel that's going to come from just, so much unpaid rent and people cashing out, or what do you think?
Not necessarily rent, but it's on foreclosures, because there's a lot of people who are just hanging on, and there's, and it's a slow roll. It takes 6 months to a year to be able to foreclose, and so we might not even see the beginning of it till the end of this year. I'm surprised, Sean, that you haven't seen a whole bunch in your with your tenants, but like you said, you screen them, and you've got some good tenants, but there's a lot of them out there that are just hanging on. And then, of course, it goes back to the landlords who can't pay their mortgage because their tenants aren't paying their rent. And, if they got a duplex collecting, $1,800 per side, that's $3,600 that guy doesn't have if for some reason he's not collecting rents.
Is there a chance that banks will decide to possibly restructure the loans, loan modifications or something of that sort, instead of foreclosing, just because they know that 10 years ago when they foreclosed en masse, that really tanked the market, and the banks lost a lot in that, and maybe they'll try to look at a different strategy this time.
I can answer that, Sergey. As far as the loan modification go, I'm a mobile notary public. I have signed a lot of loan modifications. So what the banks look at is, okay, we can modify your loan as long as you have a job, because they are still looking at, can they repay the loan? We are willing to modify the terms, say maybe from 30 years, we will extend now to 40 years, 50 years, okay? Because you didn't pay the last 6-9 months. okay, we'll extend 10 more months or 12 more months or 5 more years, however want to make it affordable for you. But do you have a job to afford that payment or repay the payment? That's when loan modification happens. But if they still don't have a job, then there is no other choice is to foreclose. So I'm going to give my insight right now, what I am seeing right now. Right now, the market is like on fire. Everybody is just go, 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 go. I am signing like 6-7 closings every day, and I have not stopped since March of 2020. The realtors, some of the realtors I am speaking with, they're saying they had the best year ever for whether they are representing buyers or whether they are representing the sellers, because the buyers, they can buy more of a house because the rates are low, right? So and there are so many buyers are from San Francisco are buying in Solano County, because now the buyers, they can work from home, they need space from in an apartment, they cannot be on Zoom with their kids because the kids are also on Zoom on virtual school. So they all need space. So they're just buying whatever is available, wherever is available. They just want a house. So they are paying, they are overbidding it. And the sellers are the realtors that are representing the sellers, they are happy as well, because the sellers who are not planning to retire or they don't like the policies of California and they want to move out of California, they are getting the price. They are getting more than what they listed for. So they are selling the house, because I'm signing the seller's packages as a notary public as well. So whenever I'm signing the seller packages, they are saying they are moving to Texas or Tennessee or Idaho or Arizona. That's where all the sellers are moving. You know, the sellers are happy because they are getting the money, whatever they paid, maybe double, triple, or whatever they're asking, they are getting 20, 30, 40,000 more than asking. So the seller's realtor is happy, buyer's realtor is happy, the lenders are happy, because people who already bought their house a couple years before, they bought it at a 4%, 5% interest rate. So they are all refinancing. And that's crazy. Refinance haven't stopped. Even before COVID, I was still refinancing. Now with the shutdown, the rates went down, and the feds have decided that they are going to keep the rates still low. So the refinance is going to be there. So all the lenders, they said they had the best year ever, 2020. And refinance is still going to continue for as long as they have the rates low. The only way this can reverse is what Mike said, when the banks actually start foreclosing on people who don't have a jobs and who have not paid. But they have not gotten the go yet from the feds because of all these moratoriums passed by the feds, and then the states have different ones that, okay, you cannot foreclose. So they are just building up right now. Whoever is not paid the mortgage is just building up. That's all. They're just sitting quiet because they know either way the banks are going to make money, right? Either they will, if they have a job, they will modify and extend the loan for 40, 50 years and still collect interest. They're going to make money. And if they don't have a job, they'll foreclose and sell it because there is no inventory. And they already made their interest in the first 10 years anyways. So they already got the money. The banks are never there to lose. They're always there to make money. So they will always make money, whether they will modify the loan or foreclose on them, get them out and sell it and make a profit. So that's my take on it.
Thanks for the insight. It's interesting hearing it from someone who's doing that, who sees the actual loan closings and talks to buyers and sellers and sees what they're doing as far as where they're moving to and from.
Yeah, and I wonder about foreclosures, because there's a couple of things that are different compared to the financial crisis. Is we've seen so much appreciation, right? And all these people that potentially will be foreclosed on have a huge lead time to sell. You know, prices aren't going down. Wouldn't they just go ahead and sell the properties before they were foreclosed on? And the other thing, at least here in the Bay Area, a vacant property will sell for a much higher price than if it was actually rented out. I don't know if it's the same in Sacramento, but especially in that small multifamily, having a vacant multifamily is not a bad thing. So I wonder if we will see as many foreclosures. We still have like a housing crisis, I think is a big play as well, that could make things turn out differently.
Mm-hmm.
I don't know what you guys think about that.
And part of the reason why vacant investment properties are selling for a higher price is because usually if there are existing tenants in place, oftentimes the rents are locked in below market rents, and
dramatically low.
Mm-hmm. And you can't raise them up to market because of the rent control laws. So I've seen that as well. If you can find something that's vacant, and there aren't that many vacant properties compared to occupied, is what I've seen. They will generally sell for a higher price.
Yeah, I mean, you have the opportunity to capitalize more. A long term. When I see listings that say, we have long term stable tenants, that's an immediate turnoff for a lot of people now. They don't care. They just want somebody who's going to get there and pay top market rate.
Opportunity to increase rents.
Yeah, I mean, it's so difficult to raise rents now on small multifamily. I mean, you're capped at 5 to 7%, nothing more than that on small multifamily. You can't raise it anymore. So if you buy a place, I just talking to a guy, he has a place in Vacaville, it's a duplex. He bought it in like December 2019, came into 2020. The laws changed in January, and he bought it. The tenants were at $800 a piece on each side, and then he was locked in and he couldn't raise the rents. So he ended up just paying them to get out, just out of pocket.
How easy is that process to have someone to pay them to move out?
It's a challenge, right? It depends on
how hard is it?
Strong negotiator the tenant is, right? I've had people. We had a tenant who wasn't paying, and one of our partners was trying to list the property for sale, and the tenant refused. I think it was 5 months worth of rent and a cashier's check. He said, "No, I'm not moving out," and just continued to not pay rent because it's free.
I could probably chime in on that too. Oh, check. You hear
there
me?
We go. Yep, now we do.
All right. Sorry, I jumped in a little late. How you doing, Sergey?
Good to see you.
I got a very real example. So just through my business, I guess, and day to day, I came across a property that the family owns it. The tenant is laying there. The tenant is also a family member. The family is owned by, the property is owned by 3 kids of the mother who passed, and the mother's brother is living in the property. So there's an emotional attachment to him being there as well, but they all 3 siblings want to sell and move on. They want to go on with their life, buy their house, whatever it may be. And at first I was working with them I was just working with them, we're investors, we're real estate professionals, no matter how you cut your teeth at it, right? So I let them know, I'm an agent. If you want to list it on the market, I'd be happy to support you and do that. If you want to sell it for cash, I'd be happy to purchase it myself and flip it myself. And or if you want.
You're on mute.
Damn it. Okay, I'm off. Sorry. Thanks. Or if you want to allow your uncle to purchase it, I'd be happy to, connect him with whoever need be to get him qualified for a loan. Well, he can't qualify for a loan. He's paying significantly under rent. The house is trashed, and it's just going to be a major hassle. So I said to them, I said, hey, I think your best bet might be to a cash out opportunity, maybe through a wholesale. Because, you list it on the market based on the condition of the property, you're automatically going to pay about 7% in closing costs. If you want to try to be a victim and sell it vacant, the cost and time that's going to come from that are all burdens that you guys are now taking on this property, which you've just been deeded over after the death of your parent, which is not your burden to bear. So in my opinion, your best bet would probably be a cash out opportunity where you're not putting any of your money into this problem, as opposed to every other scenario that we kind of patched out, where they would be having to put some form of cash out up front. And yeah, they're gonna get less, of course, but it just comes with the territory of that, right? So I partner with, I typically I would like to flip it, but I'm really scared of anything that has to have a tenant in place right now, and I don't even want to deal with that. So I was thinking about wholesaling it, and I was like, let me partner with somebody who's done it before. So I partnered with one of the biggest wholesalers here in Sacramento, and the first thing she told me was that, because I wasn't even aware that I asked myself, I was driving home from Lake Tahoe, and I was like, can you wholesale with a tenant in place? And I was like, because maybe that might be her best option. And I called her and I said, hey, I got this opportunity, but it's got a tenant. Is wholesaling a viable option? She said it is, but we cut an automatic $25,000 off the price that we would take it from them had the property been vacant. So it's kind of long-winded, but to my point, Sergey, yes, vacant property is much more attractive to buyers because one, you could have top level rents. Two, maybe there's a house hack opportunity there. Or three, also too, you see a property on the market with tenants in place, you either think they're paying significantly less or this tenant is a headache. Why would this person want to sell?
I'll add my story to that as well. I bought the sixplex last August, and the seller had actually been good about or proactive about getting the tenants out. So he had done a cash for keys deal on one tenant. He had put short-term leases in other tenant and for other tenants, and that definitely made it a lot more attractive to me based on the rent control laws around. So I do definitely see a lot of value in these vacant properties where, I don't know, some years before this, rent control got out of control, you'd want that stable tenant base and you were able to raise the rents to market or you had more of your rights as a landlord. Now that's a lot more restricted. So definitely, looking at properties going forward, if the properties are occupied, I am going to take somewhat of a discount on it based on the rent roll and take that into account in my offer.
So this is exactly the reason of bad government policies in California. So a lot of landlords or investors I meet are not investing in California, and myself as well. I had a couple properties in 2008. I had such a bad experience, and I got rid of all of those. I lost a lot of money, and that's the reason I don't invest anymore now. Not a single penny in California, and I have my properties out of state. I'm very happy with it. Even with COVID-19, my rent never fall back, and I have good property management that take care of it. And I am going to invest in the states that are landlord friendly, and where if they don't pay in 30 days, we can evict them. No hassle, no problem, and no nonsense policies like California.
Yeah, Dev, I would just challenge that a little bit in saying that every market, there's some aspect of real estate where you could have some success. And while maybe buying a buy and hold right now in California on the market may not be the best, when you're looking at the other options all across the country, I think there's still viable options to have some success here in one way, shape, or form. And it's in a hot market, a deal is not going to fall in your lap through the MLS. There's no way around it. You have to put in some work behind the scenes, some off-market stuff, networking, whatever you got to do. But investors are problem solvers. And if somebody owns a house that's cash flowing and has a shit ton of equity in it, what problem do they have? None, right? So I think with that being said, we just have to look at it a little bit differently and understand that while there may not be a automatic win on the MLS waiting for us Monday morning when we open that thing up, there's some opportunities out there. You just got to dig a little bit deeper.
I'd second that, DJ. I think those who put in the work are going to reap the rewards, right? If it was so easy out here, everybody be doing it, you wouldn't be making money. So you got to put in the work. You got to be willing to do the stuff that other people don't want. If people want turnkey and you go and you make your own deals, you're going to do a lot better with it. Also, I'm really strong proponent of when I'm investing is, a lot of it has to do with tenant screening, putting the tenants in place that aren't going to give you problems down the line. In addition to now we have these rules around the rent control. Let's make sure that we're keeping up with those. Don't fall behind like those properties that I actually look to acquire where, absentee landlords let the rent go, they don't raise the rent for 5 or 10 years out of convenience. They let the property dilapidate. To me, that's money. That's money that if you put the work in, you're going to get. So I'm happy to kind of, swoop those things up opportunistically and keep putting in the work and, building, my empire, I guess.
Well, it's interesting. Like, why don't we focus on where we're going to be able to find opportunities, right? We're supposed to be here to solve people's problems, and that's going to help us achieve our goals, right? So to me, just instinctively, wouldn't it make sense to network with some eviction attorneys? I mean, those things are just going to start piling up, and some people aren't going to want to evict. They're just going to want to get out. And if the attorneys can't evict, maybe they can just offload it to an investor who will deal with the headache. Might be a good way to go.
I love it. Now we're
That's a good
cooking,
thought.
right? Now we're coming up with some stuff. I like it.
I mean, that
Like
makes
you said,
sense.
that's what it's going
Attorneys.
to take. And then somebody says to you, "Oh, you just got lucky." Like, no. And I've been networking with this guy for 6 months straight before I got a deal from him.
Yeah, got to get creative.
So aside from the eviction attorneys, what other networking sources should we be looking at?
Divorce attorneys.
Divorce attorneys.
Probate.
I was going to say, I think probate's a killer one as well. I mean, with the proposition that just passed, people that inherit properties in California now, they're going to have to take the tax base now, whatever that is. They're going to have to pay that tax base. It's going to be reappraised or reassessed. You have to pay that tax base, as opposed to just inheriting the property and keeping the tax base, from 1976 when grandma bought it, So with that, I think that's going to lead to some more inventory. I don't know how much. That's going to go into effect, I think, February or March of this year. So we might see some more inventory from that. And those probate attorneys might be a good place to find some deals. Yeah.
Awesome.
Yep, networking events just like this, realtors, anybody really you come across. Maybe Deb as a notary comes across somebody at some point who says, "Oh yeah, I'm signing today, but I have some other property I got to get rid of." You know what I mean? It's like the last 3 I spent like $200 a month on PropStream and RedX and all these other softwares that work, but my last 3 deals have came from, one was a fellow realtor, the one before that was a divorced couple, and then the one before that was like a family, like the family had something, and then somebody saw what I was doing online and connected me with the family to find said deal. Like it's
there you go.
That's just how you got to find them. It's the reality.
What are your thoughts? And this might be a slight backtrack to the prior conversation before we started talking about ways to solve the problem that we're talking about. But I wanted to just touch on this real quick. Jobs. So we heard from a couple of people, if you want to get a loan modification go through, right, you have to have a job. If you want to buy a house, you have to have a job. If you want to keep up with rent, or if we expect tenants to keep up with rent, you would expect that they would have jobs. Given that we're a big part of our state is still on lockdown, small businesses are affected. What are your thoughts or maybe insights as far as how what was going to be happening to the job market going forward?
I kind of have a bit of a positive outlook, I guess. From a strictly job standpoint, I think if the job has been affected by COVID, we've seen it. I can't imagine there's going to be additional avenues of employment that haven't already been affected. Obviously, the service industry, obviously, restaurants, gyms, coffee shops, those have been the big hits, right? And we've seen that. I think there is going to be some underlying effects of this that we have not seen yet. But from a job loss standpoint, I personally don't see this hitting us any harder in other industries, I should say, than what we've seen thus far.
Yeah, I think you're right.
I see it differently.
We've probably seen.
I see it differently. I have a lot of family in the hotel industry. So that was missed by DJ. Hotels have been hit hard, but they got the PPP loan and the employees are getting unemployment. So we'll see what happens when this unemployment runs out and when this PPP runs out and when all this stimulus nonsense goes away, then we'll find out what's happening. Right now, they're printing a lot of money. This is the third time they're gonna come out with another stimulus package when Biden takes office. So we'll see. And all this moratorium still in place, you know. So people, we don't see real job loss right now because people are collecting unemployment checks, stimulus checks, but there still malls are closed, hotels are closed, restaurants are closed. I see when I go signing in different cities in downtown, everything is closed. But people are sitting home with these unemployment checks. So how long can the government support with the unemployment? How long they can hold on to these moratoriums? How long they will keep printing? That will determine what will happen with the job market.
Yeah, and I did miss hotels when I was speaking, but my point was that if a job was going to be lost due to COVID, it was lost already. I don't think we're going to see additional industries get hit. Hotels was on that short list, right? Hotels, service industries, restaurants, bars, gyms. Yes, those have all been hit hard and have been impacted in ways that I'm very grateful that my industry has not yet been. But my point was that I just don't see new industries who will start to be affected. I don't think.
You mean the worst has kind of we've passed the worst point in terms of industries that have been hit, and going forward, we just have to rebuild back, right?
Yeah, I think there should be a major focus on those industries and helping them get back on their feet. I don't foresee, I don't even know what other industry I could name. I don't see construction slowing down. Like that's like that would be one where I'd be like pretty shocked. But like bars, restaurants, gyms, hotels, those service industry jobs, those have been hit hard since the beginning of 2020. We know that. We're aware of that. I don't see any other industries that are now going to fall into that red flag category.
Well, I would argue, and I don't know what's going to happen, but if all these people are on unemployment and then they don't find a job, they're not going to be doing all the extra stuff like, fixing their houses, but maybe they're not homeowners. They're not going to be shopping as much. So there could potentially be a backlash in ways that we don't even see where it could lead at the moment, with all those people potentially never or not getting a job for a very long time.
And also all the commercial. I mean, yes, they're finishing commercial. They got commercial everywhere, but they're going to come to the point where we don't need any more commercial. And that is a lot of jobs right there. There's commercial on all corners everywhere. And I see that slowing down a little bit.
My background's in event marketing and event production, and I can tell you there's a lot of people that I've worked with over the years that do experiential marketing that are out of work. A lot of us that have produced multi-million-dollar projects that don't have any work to do if we don't have any other things going on. I have a construction background prior to college, so I've been able to stay busy. But I mean, there's still quite a few people that are not working. that we're forgetting about other industries. At least I feel like there's some other industries you guys aren't thinking of. You know, and a lot of brands that do marketing and experiential marketing, you know, you got to think about a lot of those events that happen that take a lot of people to produce. You know, they are all contract employees or have their own business as an agency that aren't working as well. So, you know, it's not just service.
So let me bring our conversation forward to where we talked about the last part. We were talking about is what can we do, what should we do. We've already mentioned that we should reach out and build a network with attorneys, agents, investors. Pretty much the wider our network is, the better opportunity we will have to find deals, right? If that's what our goal is. What else? What other ideas, maybe experiences you guys have in terms of what we should be doing?
In respect to finding deals, Sergey?
In respect to finding deals, obviously, and I'll narrow it down. Let's say if we're looking at California or Sacramento to invest in, right? Because out of state, that's a different topic. We can talk a long time about it. But if we talk about Sacramento, California, what should we focus on if we want deals?
We should focus on education. I follow Rich Dad, Robert Kiyosaki, and George Gammon, Rebel Capitalist, very closely. Education is important because you don't want to get hit again, like what it was in 2008-9. It's very important to stay close and understand what's going on. Right now, it's funky business because of all this stimulus and low interest rates and unemployment and all these moratoriums in place. It's very funky business, and nobody knows what the heck is going on with the market. Everybody is saying go, go, go. Lenders are getting go, go. Realtors going go, go, because they are all making money. You know, so as an investors, we need to be very careful and just keep an eye and get real educated what's going on in the market and see what's happening, because you don't want to lose money.
What are the thoughts?
Well, you know, it just really is interesting because you've thrown around a lot of comments tonight, and it just 2021 promises to be a very interesting year. It really does. We don't have a crystal ball, but there's gonna be some changes and a lot of opportunities if you have your ducks in a row.
Mm-hmm. And I think partially the way I see it is our goal is not to come up to one answer, right? Because that would actually be a disservice to all of us, because everyone is in a different place. Everyone is able to take on different risks. So the fact that we can hear a lot of different opinions is actually is what we should be hearing. And I think for each one of us, it's just more to think about and develop understand what our risk tolerance is, because anything that we do, let's say we wait and we assume the market drops, but it doesn't, right? So we're risking that the prices will continue going up. I remember a number of people I was talking about a year ago, they said prices are too high, I'm going to wait, this year they're going to come down. Then when COVID hit, they said that prices are going to come down, but we're still even higher than we were a year ago. So there's risk in that. On the flip side, we heard multiple people mention that there may be a big correction. And so if that happens and I buy something now, am I able to weather that storm, so to say, right? And if I am, and that risk to me is reasonable, then that may be fine. It may make sense for me to go ahead and buy because the risks outweigh the rewards. So there's definitely no one answer for everyone, I believe.
Yeah, and I've reading since the whole pandemic. I'm like, what's going to happen? What's going to happen? And like you said, if you were waiting on the sidelines and you had some cash, like maybe there were some opportunities that you missed. So I personally am just going to go ahead with the plans that I am creating, but make sure that I have a plan A, B, C, D, and E if something hits the fan, and I think that's all the best that we can do. We can't really predict, like, at first I was like, oh, this is going to be like the financial crisis, but there's so many things that are different this time around, especially when it comes to lending practices and appreciation and the housing shortage, all that. It's really hard to say. So that's what I'm personally doing. Just make sure that I have a few backup plans if things go south.
Speaking about backup plans, I'm looking to do direct mail in the East. I'm actually in the East Bay, Bay Area as well, but also in Sacramento. And in a lot of, especially in the Bay Area, the rents, as far as a backup plan, if you're flipping, the rents don't, like a plan B, if the rents don't match. Like if you buy property, even in the $500,000-$600,000 range, the rents just won't match to be a backup plan. I'm curious, maybe what are some of your thoughts on other potential backup plans?
What's up, Clark? I gotta link up with you, bro. I owe you a call.
No worries.
So for me, last year I was very intrigued by land development. Adding square footage, maybe adding an ADU, second unit, etc. Now, I'm only looking for a cosmetic fix. I don't want anything I'm holding on to over 6 months. I want to be in and out in 2 months. I think that makes me pretty market averse to where, okay, we don't probably not going to see a massive correction of 10+% in 60 days. I feel a little bit more comfortable doing that. So personally, I'm working on anything that is I can go in there and say, okay, I'm not adding square footage. There's no structural things. And this is a project I could probably get in and out with no permits. So that's something that I am now, that I changed my criteria. And then in addition to that, being a real estate agent, just doubling down on that, right? Because people are always buying and selling in one way, shape, or form. So if I'm working with buyers heavily, which is what I've been able to build my kind of niche around, education and working with first-time buyers, maybe that starts to shift towards short sales if we get into the doomsday scenario Dev was putting out there. But it's just, the one thing I really like about real estate is that there's so many different avenues that you could have success in it, no matter which way the market is going in your area. If you could be, aware of what the changes are that's happening and adjust accordingly, you're going to have success. People that were making money in 2008 and lost their ass in 2009 got right back in the game in 2010 and made more money than they ever did before. So I think education is huge, as Dev said, but a beat on the market and multiple exit strategies are going to play bigger factors than anything else.
Appreciate it.
Any other thoughts? You guys want to do? Oh, go ahead.
In regards to the plan A, B, and C, like I was looking into buying a house, like house hack. And, what if the market tanked and, you have to rent out all of the units instead of doing an Airbnb, do long-term or mid-term kind of renting out and, moving out if you have to rent out the whole thing and move into another place. So, that's like one example of like plan A, B, and C. And if you flip,
Absolutely.
you like rent it out or, stuff like that.
Absolutely. We got to prepare for every scenario, right? Prepare for the worst, hope for the best. And then, if you feel I used to work for Amazon.com, and this guy who was like, right when I was getting ready to leave, like my last manager, he was like really cool military guy. And I was like, damn, if I was going to work for anybody, it would have been this guy. But one of the things that he talked to me about was there is two things. There's uncertainty and there's risk. And uncertainty is just not knowing what you don't know. If I went in my backyard and started welding stuff, I have no idea what welding is. I would probably blow myself up. But with education and even a little bit of, more, maybe some training with somebody, just maybe go to a class for a week, something like that, I'm starting to learn more. So I learn, okay, as I start to raise the temperature on this welding machine, I have a higher risk of blowing myself up, right? I'm now turning my uncertainty of what not knowing anything and turning that into a risk. And risk is something that can be mitigated. So by turning our uncertainty of the market, or how to or a specific real estate strategy, or real estate investing in general, and providing more education to yourself, as Dev said, and creating multiple exit strategies and a strong business plan, that's going to turn all that uncertainty that we have right now into risk. And so we could say, worst case scenario, I'm going to lose $15,000. Best case scenario, I'm going to make $55,000. But I am understanding that this is a risk that I'm willing to take because I feel like that 15K loss is a small percentage versus the big gain I'm going to get on the other side.
Thanks, DJ. And I think that's a very good wrap up for our whole conversation, right? Because ultimately, to summarize, what we should be looking at is what's our goal, what's our risk tolerance, what exit strategies can we handle if something happens the way we don't expect things to go, and then just go forward and carefully move forward and do something, because ultimately it can be scary. At the same time, I always want to be careful not to encourage someone maybe to go too far out of their comfort zone, because you want to make mistakes that will cost you or force you to not enjoy the experience, right? Some mistakes can be costly, and you can learn a lot, but they can make it harder to get back into real estate later on. At the same time, you don't want to sit on the sidelines and just wait. Just a quick wrap up on that. Here's my thought. Let's do a 15-minute networking round. Usually we start this much earlier, but I think this was an awesome conversation, and I really appreciate everyone chiming in and sharing your thoughts. I think we should do more of these periodically on various topics. But now, here's what we'll do. I'm going to open up breakout rooms, and we'll have 15 minutes to chat and have more of a one-on-one conversation with each other. And then in 15 minutes, I'll bring everyone back in and we'll close it out for the night. So let me open up the rooms and you guys can join. Oh, I had my mic muted. All right, everyone's back from the breakout rooms. So we're pretty much right on our 2-hour mark. Any final questions, comments, suggestions from the group, or anything else you guys want to add?
I'll just reiterate what I said last time. Any way I can be of help to anybody on here, do not hesitate to hit me up. I had a couple people from the group come out to my flip that I'm working on right now the first couple of weeks and help out and just gain some experience. That was really cool. And Clark, I know I owe you one, brother. I'm sorry about that. I've just been crazy busy. Yeah, it's just somebody help me. I'm willing to help out the next person. So any way I could be of service, hit me up. I'll I'm sure Sergey sends out all the numbers and whatnot at the end, so you guys will have it there. But anyway, I could be of help. I'm happy to do it.
All right, thanks, DJ. Our next meetup will be, I believe, on the 1st of February, and we're gonna have someone who's in the commercial real estate space share some things. So I know that topic came up a couple times today, so it's gonna be interesting to hear their aspect. But until then, I'll send out the contact info for all of us, as I usually do, via email. Feel free to reach out to each other. it was good to see everyone, and I appreciate everyone's involvement. I think we had a good talk today. A lot of good thoughts and viewpoints. So thank you, everyone.
Bye, everybody.
Thank you.
Thank you.
All right.
Thank you.
Well,
See you guys next month. Thank you.